Trading again. Now, what happens when you buy and then it goes to stop loss? You lose the account. You lose money. That's not what we want in trading. You want to use trading to make so much money to a point where you want to go ahead and start any business idea that you want. You want to do whatever you want. Now, in order to do that, you have to avoid smart money traps. What are smart money traps? Let's see to it on the charts together. So, again, let's say we have equal lows, like the blue line over here. That blue line shows us that, hey, you know what? We are supposed to have liquidity being taken out. We already know that by now. Market can't fool us. We know exactly what we want. Now, after this is being taken out, what do we want? We want the high that created that liquidity sweep, as spoken before, to be broken. If that high is not broken and you simply see buyer intent over here, sure, but that is very little buyer intent, and it's not enough buyer intent for us to go ahead and say, hey, you know what? I'm going to give the market my money. I'm going to give the market my money. Not only that, but I am willing to risk my capital for something that I don't know. Well, please don't do that. If you cannot validate the liquidity sweep with a break of structure, breaking this high that created the low, that took out the liquidity, you can't half do trading. You have to have the whole package aligned to have a higher probability trade. It's a random outcome game. And in a random outcome game, you have to at least have the probabilities be on your side. If not, welcome to smart money traps. Now, let's go ahead. I'm going to explain it to you. Very simple, very beautiful. After we have the buildup over here, we have a liquidity sweep. Now, you want to have a break. If you don't have a break like this zone becomes invalid. This zone becomes more and more and more liquidity, and price will just come back. It will invite you in. More and more sellers are going to be coming in, and then you're going to be taken out. From the buyer side, I'm going to do the same thing. You're going to have buildup, and after we have the buildup, we already know that more and more liquidity is over here. So in order for price to give us, well, you know what? I'm going to give you an even better example. Let's say we have buyers over here. We have the buildup, and after we have the buildup, we know that all the stop losses are residing over here. So all this is liquidity. We know that by now, right? Now, if this comes down and shows a liquidity sweep, what are we waiting in order to buy? We're waiting for that high that created the low to be taken out. If that doesn't happen and we have something like this, that is not validated, and this zone is not a zone to buy from. So what does the market do? Manipulate over and over and over again, and it doesn't stop. Why? Because we build more and more and more liquidity, and you're going to see how. So what happens is price comes back to the zone, invites you in because we want more liquidity. If you're someone that thinks, hey, you know what? We've had strong buyer intent over here. Now all I'm going to do is wait for my zone because that's what we normally do. And then we buy. Well, price doesn't have that much intent to go ahead and create a higher high. So what happens is it gives you a reaction. After it gives you a reaction when it taps in, it comes here, gives you a reaction. You enter the trade. When you enter the trade, more stop losses are situated over here. That means more liquidity over here. So combine this liquidity with this liquidity, and boom, you get taken out. So build up, fake out, no break, take out. Remember, it might give you an invitation to take you out. Now, if we look at the charts, same thing. We have the lows. Now we would be having more taps into it, but it's just a higher time frame, and we play. Here's what happens. Over here, you're looking to buy from this zone, but the reality is you're going to be taken out. Imagine how much liquidity is being generated in the market because of this. Now, you are now probably trained enough to know that this could be another trend line liquidity. You are trained enough that this is not validated, that you know that buyer intent is not logical. You know why you're not buying from that zone anymore. Just simple market structure. Again, this is the 15-minute time frame, but this is the candle that tricks you. So on the 5-minute, this would be strong rejection. And you'd be like, oh, it's my time to go ahead and start it. It's my time to go in the trade. No. Smart money traps. Don't fall for it. Done.